Good morning, everyone. Today is Wednesday, 3rd of December 2014. You are watching a live daily market outlook prepared by Windsor Brokers. US dollar remains top performer and holds a strong tone against a basket of major currencies with the fresh acceleration against euro and sterling seen at the beginning of European session, while against yen yesterday dollar posted the fresh 7-year high above 119 barrier, which was taken out again, and the price reached 119.42. So far, Aussie dollar from the other side remains under pressure and was hit after weak GDP data from Australia released earlier during the Asian session, with the price now stabilizing below 84 psychological level. From commodities, spot gold is back to strength after finding temporary support at 1191, back above 1200 barrier, which in case of today's close would be a good signal for a renewed attempt higher 1220 and in extension 1228, 1240 our next targets, which we are going to elaborate more in our technical part in a few minutes. Just to mention spot crude oil January 15 contract is in the near-term consolidative mode of fresh low at 63.71, with the upside still being capped under psychological $70 per barrel level, and slightly negatively aligned near-term structure keeps focus at the downside. As overall trend on the crude oil remains negative. A brief look at today's calendar before we move to the technicals. Let's take a look at data which already released. The GDP for third quarter, a downbeat release at 0.3% in Australia versus 0.5% in the second quarter, quite optimistic forecast at 0.7%, which pushed Aussie dollar significantly lower. Important was also release from Chinese services PMI and non-farm manufacturing PMI data, which came ticks above the previous releases. Swiss third quarter GDP has beaten the forecast of 0.3%, which is identical to the second quarter's release, came at 0.6%. From important releases coming, retail sales from Eurozone due at 10 o'clock, GMT, are forecasted at 0.6% in October, increase compared to the pullback of 1.3% seen in month of September. From the United States, ADP non-farm employment change for November is the one that is preceding U.S. non-farm payrolls data, which are due on Friday, and one of the signals of possible levels of the NFP data. This release today shows forecast for today shows 223,000 of new jobs compared to the 213 previous month, which is close to the previous release, and shows that positive trend is still in play. Anything above would be a good signal. Anything not significantly below the previous release and the forecast will be also good for the U.S. economy, while any release which will be below 200,000, for example, would be a negative signal. Services PMI from United States. This release ADP is the 1315 GMT. Services PMI is at 1445. No changes seen. With the Bank of Canada coming with their interest rate decision at 1500 GMT, 1% is the forecast, and it's unchanged. It's expected widely to stay unchanged at the same level, with the statement following rate decision at the same time. At the same time, we have ISM non-manufacturing PMI from United States for November, positive forecast at 57.5 compared to the previous release at 57.1. Half an hour later at 15:30 GMT, we have crude oil inventories which are expected to show build of 1.1 million barrels in the week behind us, compared to the build of 1.9 million barrels in the previous week. A couple of speakers from FOMC will conclude, as well as Bank of Canada Governor would conclude today's economic indicators releases, and we are going to take a look at our technicals to see the expectations for today's trading for the major currencies and commodities. As said, euro remains under pressure and continues to move lower with the fresh weakness seen at the beginning of European session. We are at the 4-hour chart where the price now eventually broke below strong support and base at 123.60. It's better seen on the daily chart. This held downside protected since the first week of November, with the repeated attempt again being contained here, and the last bounce of 123.60 low ended up at 125.30, followed by this sharp steep descent. Yesterday's long red candle and close in red confirmed the negative stance, which was signaled the negative stance and the attack at 23.60, which was confirmed on this morning's action as the price breaks below. Of course, daily close below this level is to reconfirm and open way for a further extension lower. If we take a look at the current movements of the single currency against the US dollar, then the price action is currently riding at the third wave, which commenced from the lower top at 125.05 and now broke below its target at 123.51, which marks its Fibonacci 138.2% retracement, with the price action capable of traveling down towards 123.25, which is 161.8%. Fibonacci expansion 123.08, 176.4%, and 200% Fibonacci expansion at 122.82, with the price action also looking for a test of our short-term target set. Bull trend line support, we're talking about bull trend line which connects lows of 2005 and 2010 and currently stands at around 121.06, ahead of next key support and the breakpoint at 120.42, low of July 2012, which are in the short-term target for euro against the US dollar. Important was that the price action broke below 123.60 base. We are awaiting today's close, which should ideally occur below this level, to confirm a bearish resumption of larger descent from 139.92, which is the lower top of May 2014, and the price then will be extending towards Fibonacci expansion levels and the targets Fibonacci daily trend line support, and the low at 120.42 short-term targets. Spot cable shows the negatively aligned near-term structure following recovery rally from 155.83, which was last Monday's false break below 155.90 base, which was rejected at 157.61, and subsequent easing initially found temporary support at 156.30, which is now under attack for eventual full retracement of this corrective rally, and the attack at a strong support and base at 155.90 zone, which break of which is expected to signal a resumption of the larger downtrend, interrupted by this consolidative action above 155.90 and being capped at 158.23. Yesterday's negative close and the overall price action being capped by descending 20 days moving average of daily chart supports the notion of eventual attack at 155.90 and extension of larger downtrend from 171.89 peak of July 2014 for further extension lower, and our target is Fibonacci 76.4% retracement of larger ascent from 148.12 to 171.89, which stands at 153.73. On the upper side, consolidative actions which were so far capped at 156.55. Anything stronger should find good solid barriers at 157, 157.23 barriers. 157 is the daily Tenkan-sen line, which offers good resistance, and 157.23 is 157.23 is lower top of yesterday, and break below. Break above these levels would be extension signal for stronger bounce of near-term base at 155.90, which would prove that offers strong resistance. This is alternative scenario in case of not breaking below 155.90. Bounces higher should be contained somewhere above at 157, 157.30 to maintain this negative structure, as the price again returned down to the lower part of the current consolidation range and sees a threat of renewed attack at 155.90, below which to resume a larger rally. On the other side, the dollar yen maintains positive tone, as yesterday's fresh strength posted the new high of 7 years at 119.42, which was followed by brief consolidation, which is now being supported by above 119 level, now reverted to support. Fresh strength is underway, again approaching our recent high at 119.42, with the break higher to finally open the way towards our target at 120 zone. It's psychological resistance, and just above it it's at 120.12. Fibonacci 61.8% retracement of larger 147.68 to 75.55. This is the monthly chart and shows a strong ascent of the currency pair, acceleration from the higher base, which was around 101 zone, and is now looking for a next significant resistance zone. 120 is the lower part of the resistance area between 120 and 120.14, which is the peak of 2007, and is in immediate target. As overall picture remains firmly bullish and favors eventual attack at psychological Fibonacci barrier at 120 zone. 119 now offers initial support, and anything below 119 should be contained somewhere above 118.30, where daily Tenkan-sen line, daily 10 days moving average, as well as daily Tenkan-sen line underpin current price action and contain so far all dips. This will be seen as a first breakpoint. In case of any extension below these levels, would be a signal of further weakening and possible return down towards our key support of the near term 117.24. This is the lowest of the corrective pullback from previous high at 118.96 to 117.22. Any break below 117.22 is to signal stronger corrective action and sideline ideas of attempts towards 120 zone. Of course, this is so far an alternative scenario, as the price action remains well supported and heads towards our target at 120.00. Aussie dollar against US dollar remains under pressure and posted the fresh low at 83.86 after just overnight's acceleration lower on downbeat data for GDP data from Australia, accelerated and eventually broke below 84 barrier, which is now acting as resistance. 83.86 lowest seen so far. Brief consolidation seen as a hesitation on attempt below psychological psychological 84 support, but yesterday's long red candle with the long upper shadow shows increased downside pressure and selling interest, which maintains negative tone with today's so far negative red candle, again confirming the notion of eventual firm break below 84 level and extension of the larger downtrend towards which now comes in focus, psychological 80.00 support, and in extension we can look for a 61.8% retracement of ascent from 60.07 to 110.79 and standing at 79.44. So negative tone prevails and sees corrective sees further downside as favored. Now on the upside, any extended corrective actions will face today's session high at 84.65, Asian session high, pardon, at 84.65 as initial barrier, above which immediately comes 38.2% retracement of the downleg from 86.13 to 83.86 at 84.73, while key barriers stand at 85.30.40. These are the two peaks of the 1st and the 2nd of December 2014, Monday, and yesterday's highs, and any stronger bounces should not exceed these levels and should be ideally capped to maintain current bearish action intact. Otherwise, break above 85.30.40 would sideline immediate bears and allow for some possible stronger corrective action. Spot gold maintains so far a positive tone after pullback from fresh high at 12.20 posted on Monday. Found support at 11.91, which also marks Fibonacci 38.2% retracement of the upleg from 11.42 to 12.20. Subsequent bounce signals base formation at 11.91 as the price action takes out extends above psychological 12 level. Now we have levels to watch. 12.10 is yesterday's intraday high, and 12.13 is the high of yesterday, above which to confirm positive stance that's established of 11.91, and of course to offset this negative negative close of yesterday in a red candle, which again has a longer lower shadow that shows a strong buying interest and limits corrective action so far. So in case the price closes above 12.13, that will be a confirmation of bullish reversal towards 12.20, and in extension we have 12.25 Fibonacci, 76.4% of 12.55 to 11.31. Descent just above this is 12.28 daily Ichimoku cloud base, and then in case of a break higher, next dynamic barrier is at 12.41, which is daily descending daily 100 days moving average. Positive tone that prevails on the 4-hour chart supports the notion, as our indicators are now gaining some traction. Some hesitation is seen on approach to 12.10, 12.13, as these are pivotal barriers, and in case of sustained break and close above these levels, we can confirm recovery action and attack at 12.20. Conversely, anything below 12.20 would signal extended consolidation, while 11.91 support holds. Otherwise, in case of a loss of 11.91, extended corrective action would be in place with lower top formation, of course, towards 11.81 Fibonacci target 50% retracement, and 11.72 Fibonacci 61.8% retracement as initial targets, and break below 11.71 and the this higher low at 11.69 would bring near-term bears back fully in play, and sideline attempts towards recent peak at 12.20. And this is all from our side for today. I would like, if you have any questions and comments, to send them right now. We have a question for crude oil, which is quite interesting, as significant losses were seen in the recent trading of crude oil, which has several reasons for such low price. It's America's production of oil, which now threatens world top producers of oil, countries of Gulf and South America, with Russia having interest in higher prices. Now there is there are comments about the political part of all this story about low oil prices, which were raised by Russian President Putin last week, who said that they are trying to establish pressure against Russia by lowering oil prices. Some of these could be seen as realistic reasons, with the mixed reasons keeping the lower oil price at the low levels. The price action is still riding on the third wave, which commenced from 107.45 peak of June 2014, and so far reached levels below its 200% Fibonacci expansion, which was at 65. Lowest was at 63.71, and on the larger picture again, we have this consolidation above this fresh low at 63.71, which was so far capped at 69.52, keeping a psychological 70 barrier intact for now. And while these levels hold, more focus will be still seen towards the downside, as prevailing tone and the original tone of primary tone, of crude oil is still bearish, and overextended conditions of the daily chart suggest that some prolonged consolidative action should precede fresh weakness, as bounce was capped so far slightly above Fibonacci at 38.2% of the latest downleg from 77.79 to 63.71. On the lower time frames, neutral negative tone is seen on the hourly chart after the price peaked at 69.52. Now extension lower was seen so far to the midpoint of the recovery rally from 63.71 to 69.52, suggesting that downside is under pressure in the near term. Also, the 4-hour structure is bearish, and most likely scenario is fresh extension lower, as the price action was so far capped by descending 4-hour 20 days moving average, which signals further pressure towards the downside. Loss of this initial support at 66.70 zone is to risk possible full retracement of 63.71 to 69.52. Corrective rally and the resumption of a larger downtrend, which would be looking now for extension. We have a spike low of July 2009 at 58.30, and then in extension we can the wave could travel down to 51.88 level, which marks its 261.8% expansion, as the strong acceleration from 107.45 peak still shows no signals of end at the moment. Current consolidation could be seen as a brief action, consolidative action before the price resumes lower. So we have 69.52 and the 70 barrier as initial resistances, and in case the price breaks higher, further break in the current descent could be anticipated with the first strong break point, strong barrier and break point standing at 77.79, peak of 21st of November 2014. Only break above this level would have a more significant impact on the current bounce. This is the beginning of the previous week's sharp descent, which is another good bad signal for the oil price, as this long red candle suggests that further acceleration lower is seen as a likely scenario in the near term trading. So keep an eye at 69.52.70.00 and the key barrier in case of any extension at 77.79. More likely is a return back to 63.71, an extension, fresh extension lower of the larger downtrend of the oil price. Is there any other question for today, please? Okay, if we have no further questions for today, our time is finished in any case, so we're going to conclude today's session. Many thanks for being with us. I can see some new names that I didn't see before, so I would like to welcome all newcomers. We hope that we provide you good services for your trading, and anything you would like to suggest or comment, please don't hesitate to contact us on the email that you can see on your screen, analysis@windsorbrokersltd.com. My team will try to answer all your questions and to adjust the current sessions for your needs. Have a good day today and expect to see you again tomorrow morning. Also wish you a nice day and success and the profits in your trading. Good luck.